I know a lot of people try to trade higher time frame, or they try to use only price action. What do you think are the mistake they make when they try to look only at price action?
When they look at only price action,
Yeah.
well, I mean, the biggest mistake people make is they think that they can't trade it because their account's too small.
Yeah.
But you can move to a broker, obviously, that a broker that will allow you to take really small lot sizes. So that's not really a problem, but people think it's a problem. The other issue, I think, is you don't look at context. So I'll give you an example. I might have, let's say I'm watching the pound USD go up, and I might have a situation where it looks like that the pound is going to reverse because it throws up like a kangaroo tail, which is one of the classic naked forex reversal signals. But if I look at the overall context, what I'll notice is that, out of the last 8 candles, the market has hit resistance 3 times. And this third time that it's hit resistance, it's thrown up this beautiful looking kangaroo tail. Well, that actually may not be such a good sell signal. That actually might be a breakout that's happening because it keeps hitting resistance, and it's hit resistance repeatedly over successive candles. And so that's one thing that I look at, and I think a lot of traders, they just look at the signal in isolation and they don't look at the overall context of the chart. I think that's one area. The other area that I'm a big fan of, and this will be in the new Naked Forex book, is looking at what the retail traders are doing. I think you can get a huge edge by knowing what other retail traders are doing. And of course, the secret is that you do what they're not doing. So if like 77% of the retail traders are selling the pound USD, then I know that it's in an uptrend and I want to be buying, that sort of thing. But so you can overlay that on naked Forex patterns too. So, but I think the biggest mistake, if I had to say it, would be not looking at context, not looking at the overall picture, and just focusing on 1 or 2 candles, which is in my estimation, in my experience, that doesn't work very well.
If you trade only a few things, your drawdowns are going to be bigger, and it's going to take more time for you to recover, like maybe months or like at least a few weeks to recover. So how have you deal with this? Have you implemented more strategies, more setups to be able to kind of combine things together?
Yeah, more strategies and more setups. The more markets thing is overrated, though. I think what you'll find, and there's data to support this, is if you trade more markets, the markets are fairly correlated. You're better off trading complementary systems, so like a trend trading system and a swing trading system, or something like that, a breakout system and a reversion to the mean system, or something like that. But yeah, the other thing that you can do, which I find to be useful, and again, people say, why do you work with traders? Why don't you just trade on your own? Well, one, trading is very lonely.
It's boring.
Yeah, it's boring. And two, I've learned some really cool things from my students. So it works both ways. And one of the things I've learned is that it makes sense to break up your trade. So let's say, for example, you're taking a trade and you typically risk 2% on the trade. Well, and you have a trailing exit that gets you out of the trade. All right. Well, let's say that you take that same trade and you break it up into 4. One trade has a hard target of, say, 3R, so 3 times your risk. Another one is the typical trailing exit that you normally use. Another one might be one where you actually pyramid into it. So as the trade gets closer and closer to a target, you add more positions and maybe you keep moving it to break even. So if it comes back and retraces against you, you get popped out of that position at break even. But if it keeps accelerating towards your target, you make a whole bunch on that 1/4 of the trade, which is 0.5% risk. And then on another one, you might have a really easy to achieve target. So instead of 3R, 3 times your risk, you might have 1.5 times your risk, or something like that. So just that concept of taking the same trade, the same signal, but instead of just putting everything on one exit strategy, you split it up into 4 different exits. That thing can help too. That's a very powerful idea. If you can go and test that and see if that will work for you. But typically, it's really cool because you think about it, you're at that point where, okay, if the market keeps going really fast for me, then my pyramiding position is going to make me money. And if it doesn't, that's okay. It comes back out and stops me out. But if everything totally falls apart, I still get the same loss that I've been having. It's just I have more opportunity to be right. And you're always going to be right when you split it up in 4 positions like this. One of them is always going to be the right decision, right? So you don't have to second guess yourself because you get to be right almost every time. Now, of course, when you lose, all 4 positions are wrong too, and you're wrong, but that doesn't really matter because that was the original risk you had on anyway with a normal trade. So yeah, that's one thing that can work quite a bit is allowing yourself different exit strategies even on the same position.